We detected an unusual trade worth $183 million in Microsoft stock options being traded on the last trading day, the day after Microsoft hit a new high of $450 per share. So will Microsoft continue to move higher? Maybe all the way breaking above $500 per share? In this video, we will answer this question by analyzing another set of unusual option activity data to find out, because this data represents the trades of wealthy investors who may have access to insider information, and that is why they can make better financial decisions and why the rich get richer on Wall Street. So without further ado, let's dive into the data as usual. As we can see on the option time and sales tape, 51,000 contracts being traded on the last trading day, June 18th. And we can see this is for the 420 strike calls expiring August 16, but we also have the 375 strike calls being traded. So let's take a deeper look at the chain to find out what this wealthy investor is doing. Now you can see here at the 375 strike calls, 42,000 open interest, volume 41,000, less than the open interest. So they are closing and taking profits on this trade and rolling to a higher strike price. The 51,000 are being opened here because the open interest is just 2,400 at the 420 strike calls. Okay, so they are buying these call options to open. So when we analyze this trade, you can see here, x-axis on this graph is the share price of Microsoft. As it goes up in price, these call options become profitable. If Microsoft goes down, they become a negative, which is a loss. So this is a bullish long trade. And we can see that the 51,000 contracts here, because these are the opening trades and these are the closing trades, if we calculate the trade cost of 35.99 times 100, since these are options, each option represents 100 shares of stock. Each call option costs $3,599. And since there was 51,000 contracts, this trade requires $183 million. So that is why this is a significant amount of capital and quite unusual, and gives us a bullish signal because these are call options that are going long. Now, if you see that the data now, because this is Microsoft, there is other data from wealthy investors that are also happening at the same time. It could be bullish one day, but it could be bearish another day. And that is why the data on stocks like Microsoft are not as strong in comparison to other stock picks that we share on our website, where the data is a lot stronger than Microsoft. So if you want access to those stock picks, make sure to go to our website where we share the higher chance of profit trades that the wealthy investors and insiders are trading. Now, will Microsoft potentially break above $500 per share? We have to dive deeper and look at more data because Microsoft has a lot of data. And as we look down on the tape, we can see here that these trades that have less than 1,000 contracts are also very unusual. But is this significant enough? Because it's less than 1,000. And we can see here, these are for the October 18 contracts. and also the November 15 contracts at the 510 strike calls and the 460 strike calls. So is this significant enough? Is this more than 1,000 contracts? And how much more is this? When we take a look at the chain for the October 18 options, we can see here that there is, in fact, 20,000 contracts being traded. And you can see that there's 24,000 open interest. So what they're doing is closing out of their trades and rolling to a new trade. And you can see that we are also following this trade. Originally, we also got into the same position. And what we did was we sold some contracts to reduce our risk at the 490 strike calls. But we are also following the new trade as well. The November 15 contracts here, you can see at the 510 strike calls. We are in this position where these 20,000 contracts are opening trades, since there was only 826 open interests, where they are buying these call options to open. And just like the previous trade, this is a bullish long trade. As the Microsoft share price goes up, these call options become positive. If it goes down, it is a negative, a loss. But this call option, notice that the break even is right over here. This is where the share price meets the zero profit loss line over here, because the y-axis here represents profit loss. If the lines are below the zero, it is a loss. So that's their break even on this call option at expiration, November 15, because the blue line represents expiration, whereas the purple line represents the current date. So if Microsoft goes up quick enough before expiration, these call options will become profitable right away. That's on the purple line. But it does decay in value. And so that is why this purple line drops to become the blue line as time passes, and why the break even over here shifts upward to about $520 per share. So Microsoft has to be trading above 520 by expiration for these call options to be profitable. Okay, but they can be profitable right away if it goes up significantly higher at an earlier date. So based on this analysis, there is a good chance that Microsoft will break this $500 price level by November 15. And as we mentioned earlier, Microsoft is a stock that has a lot of data, so it is not as clear if we follow this data. So it has a lower chance of profit in comparison to the trades that we share on our website. If you are interested in more of our analyses work, where we share the higher chance of profit trades of wealthy investors, then go to our website. Let us know what you think in the comments below. Do you think Microsoft will break above $500 a share by November 15? As usual, please smash the like button. Take care and have a great day.